Hey traders, welcome back to another Sunday video where we talk about trading setups for the week ahead. In this video, we'll be taking a look at the indices, we'll look at the dollar, we'll look at gold and some currencies as well. Should be interesting. And as we get started, I just want to ask a quick favor from you. If you enjoy my videos or find them helpful, consider hitting that thumbs up button. It really does help out my channel and I really appreciate that. So first of all, I wanted to show you guys, here is an updated last 30 days of my P&L. And I want to show you this because you can see I actually had a pretty sizable give back on the P&L. This is the last 30 days going back from same time last month. You can see I worked my way out of a little bit of negative P&L there and then came very positive. Towards the end of this week, I was like, wow, we're having a really great trading week. And then that gold drop happened and I ended up giving back a substantial amount of my profits. In fact, just a long story short here, I had $20,000 in profits floating on my gold trade, and that got wiped out. I closed out for a final profit of just 9K, which again, I say that as just 9K. It's still a remarkable trading result, and I'm happy with the trade, but one can't help but feel a little frustrated when you lose in unrealized gains, $11,000 in a single pullback on gold. But we'll be taking a look at gold. I'll tell you guys my plans on that. And again, the account is a larger account size, so you have to understand the swings that come with a larger account capital, are going to be much bigger. This is my year to date, 1 year. You can see kind of the longer term looks good, but the swings in the short term can be frustrating to deal with. That being said, we'll get to gold in just a moment. I'll tell you my thoughts on that. But first, let's talk about the dollar. The dollar index had a really good week, considering that other central banks around the world, like the Swiss National Bank, actually surprised interest rates or surprised cut their interest rate this week, which was of course a very interesting thing for the dollar, because if you think about it, if other central banks are cutting their interest rate, suddenly it makes the dollar look a little bit more attractive as the Fed has been hesitant to cut rates. Another factor to consider this week on why the dollar actually became a little stronger was because PMI numbers out of Europe looked pretty poor. In fact, this week we got PMIs out of Germany, which came in lighter than expected on both the manufacturing and services side. If we take a look at the Eurozone as a whole, we also got lighter than expected PMI data, which really puts a thorn in the side of growth out of Europe, which here's the other side. We also saw strong US PMI numbers this week. So the divergence where the US is looking up in terms of economic growth and Europe is looking more slowing. When you take that into consideration, that makes a lot of sense as to why the US dollar looks strong relative to its peers. So as we look at the price action of the dollar index, we did round out here, find support in this area, and now it looks like, at least in the short term, the dollar does want to go back and retest this 106.4 level, let's call it, the upper limits of this kind of range we've been in, which is kind of a pretty aggressive turnaround from where we were. It looked like the dollar might actually break through that 104 level. In fact, it seems like now dollar bullishness is kind of short-term here to stay. Again, with those strong PMI data points out of the US on Friday, that really solidified this gain here for the week and put some pressure on other currencies. Like if you're watching the euro and the pound, which look pretty weak now, just considering that the dollar strength continues to push it higher. Here's dollar yen actually breaking through those highs at 158 yet again. I mean, this is a recurring theme, a recurring pattern. If you're looking at the dollar yen over the last few years, it's done this many times where it sets up this huge level of resistance and then boom, a big green candle comes along and takes it out. And that seems to be happening yet again here at the 158 zone, which now has broken and actually could be drawn as support now, which is a pretty substantial breakout for currency traders to keep an eye on. Let's take a look at gold here for a moment. So gold, I actually did end up re-entering my trade after everything that happened this week. There still seems in the central bank world, like if we're talking about the direction of interest rates globally, they still seem to be headed lower this year. And when interest rates, remember that gold looks at the global story, not just the US story. Now, I know that there's been a lot of people questioning, well, Nick, how can you think that the dollar has upside, but so does gold? Because doesn't it work where, if the US dollar is going up, doesn't that mean gold has to go down? And the answer is no, it does not, because remember that the dollar is relative to its global peers, just like gold is kind of looking at the whole global situation. So right now, is there upside for gold? In my opinion, yes. I made some good money on this move. I bought this low here and ended up, as I mentioned, closing out of my trade here as it failed kind of on Friday. So when a big sell off on those PMI data did take me out of the trade for a profit. I mentioned, around $9,000 profit on that trade, but I have reintroduced risk to the account by taking another trade. So I am back into the trade. And I'll show you the signal that I sent out to members as to why I took this trade. So I bought gold. I've decided to re-enter my trade with the smaller size and again place my stop loss below that daily structure level lows. That's that 2300 level that we've been talking about a lot. This is a swing trade and could take some time to play out or stop out if it does break that level, but I continue to like the trend of central banks looking to cut rates. While PMIs were hot in the US today, they were cool in Europe, and I still believe the Fed is likely to cut rates this year, which could be a bullish catalyst for both gold and silver. And then I also like the technicals quite a bit. Now you might say, well, Nick, the technicals are sideways, and that is true. Oh, sorry, my cats are fighting if you heard the slaps and hisses for a second there. Anyways, I still think that even though there is some consolidation happening here, I still think that bulls are strong in this area, and I'm happy to hold through a drawdown as long as buyers step in. But I do think that there is a possibility that we have put in a low here and that we will make a push back up to the upper limits of this range and beyond. I think that the upside for gold is very much a real thing because, again, I think the direction for central banks globally, including the US, but not limited to the US, is for interest rates to be cut as the economies of the world start to slow down. That's a scenario in which case I like the prospect of being long gold as well as long another position that I have, which is TLT. This is a bond market ETF. If we see the economies of the world slowing down and also inflation cooling off, TLT could be a very strong trade. So I've already got a position on this one. I'm long TLT in the signals room. This is under the position trades. I've been long TLT for some time, and this trade is doing pretty well. Last time I checked, it was floating around $1,900 of profit. So it's a good kind of longer term position for me so far. We'll see how that plays out. TLT and gold will both greatly benefit from the prospect of rate cuts this year if we continue to see things trend in that direction. There is an if there. I could be wrong. And as always, when I share ideas, I have a stop loss in my trade for a very specific reason. I can and have been wrong in the past. So that's my thought process on gold. If we break that structure this coming week, if things completely fall apart for the gold bullish story, I'm out of the trade. I take a loss, and that is what it is. Otherwise, if we can see some upside, if some continuation to this upward trend that started this year proceeds to happen, I'm happy to also stay in the bullish position. Now, I mentioned I'm also long silver, and this is another signal that I shared inside of the Discord room. Also, while I'm on the subject, before I forget, we are currently doing our biggest discount on the VIP group of the entire year. Currently, you can get 50% off with the code YTVIP down below in the description. So down below in the description, if you click that link to check out the VIP page, you can see all of the different details. You get access to our trade alerts. So I'll just show you this really quick. All the different trade notifications. We trade FX, commodities. We have position trades, indices. Frank's sharing his trades. Ivan shared his. We have chat rooms available, coaching webinars, a strategy guide section, and so much more. If you're not already in the Discord channel and you're considering it, this is the best time to do so. Take a few minutes today if you've thought about it in the past. You're never going to get a bigger discount than this because currently we're doing 50% off. That is half the usual price for any of our memberships. I'd encourage you to just try us for a month if you're not sure about it. Just see if it's right for you. It is so discounted right now. Why not give it a shot? Okay, so yeah, again, YTVIP is the promo code that gets you that half off sale for YouTube subscribers. You get that 50% off. Okay. So let's keep going. So silver, as I mentioned, I really like the technical chart. I think it looks good. I think it looks really, really strong here to the upside. And you might say, well, recently it's put in some lower highs, and that is true. But I'm using the daily chart trade as a guide here for my trade. And this big break to the upside, I think was real. I think, of course, Friday's move was also real, down 3.8%. That's an aggressive sell on a single day for silver and for gold. But I think that there's that US PMI data that came in hot, that really threw a wrench in the story. But I think that the overall trend for economic data and for inflation this year is still lower. And if that is the case, silver and gold will look really strong. And I love this technical setup. I know where I'm wrong. This level of structure here, 28, if we break 29, that's a cue for me to say, hey, you know what? The trade idea was not a good one and it's time to get out. And my timing could be off, but I think that my directional bias for silver and gold over the longer term, the next months or so, could prove out. Even if I take some losses in the meantime, I'm going to continue to look to buy gold and silver as long as we continue to see the prospect of rate cuts and slowing inflation, for central banks to continue to cut rates. Because again, central banks are already cutting interest rates. We've seen the Bank of Canada, the ECB. We're seeing that become the trend, and that trend, ultimately a winner in that story is gold and TLT. So those are some of my positions, as I mentioned earlier. Also, let's keep going. Let's talk a little bit about the indices. So we did see a bit of a reversal this week, but a weak one, because again, take a look at how the candle closed here on the daily chart. This is what I warned on Friday. A lot of people wondering, hey, is this the sell that we've been looking for? Is this that big reversal that's coming for indices? And while it still might be, I wasn't very convinced by the price action on Friday. What I mean by that is you had on Thursday a little bit of a sell candle come into the S&P, but then on Friday, was there follow through? There kind of was, but look at the two wicks that printed off the bottom. And if we look left, look what we've been seeing each time price, again, wicks off the bottom, we end up seeing a follow through reversal to the upside. And so for me with the indices, they're so bullish right now. This is not something I'm looking to buy into. I'd like to see a little bit more of a corrective phase. And I also currently don't have any setups on the Edge Finder for indices. I am still bullish gold and TLT because they're setting up on the Edge Finder. When I take trades, they have to kind of give me some confirmation from the Edge Finder's data here. And so I don't really see that with gold, the NASDAQ and S&P 500. I'd like to see a bigger pullback, and I'd like to see some of the economic data smoothen out a little bit before I really start, jumping into these things. While they can continue to go higher, I think the risk reward on, going long is a little tricky. It's a little dangerous. Now, maybe from a trader's perspective, if you're just kind of like, well, you know what, that was a good candle, I'm going to stop below the lows, maybe we just continue to chug higher. But for me, the conditions are not quite there to be really taking trades on the NASDAQ and S&P. I'd love to see price pull back. And if we get a pullback, then I'd like to look at what the Edge Finder has to say during that time. See if economic data looks a little bit more favorable towards being bullish for my approach to the markets. And then maybe I could take some trades, but I'm still waiting. Dow Jones actually had a good week here off of, again, the big Thursday push to the upside, which was interesting because that happened at the same time that the NASDAQ and S&P actually had down days. And it all comes down to, at least for the indices divergence there, the big story, which has been Nvidia. And Nvidia actually had not a great week, which I know it's kind of shocking, but we actually saw from peak to trough here a swing on Nvidia of almost 12%, 11.79 roughly percent here in terms of a drawdown from the peak, which is aggressive. But you have to also understand with this really volatile stock, it can go up and go down very, very aggressively. So something to keep an eye on is that Nvidia chart, because it is dragging the S&P and NASDAQ, which are heavily weighted on Nvidia, up or down. So keep an eye on Nvidia. Again, it's been a story stock for the ages. It's gone up so dramatically, and I would not be surprised if, at some point here now, here soon, or even, going into future weeks, we do see an Nvidia pullback. I am not a bear on Nvidia. This is a really impressive stock, and it's leading the AI revolution, if you want to call it that. My concern is with a chart like this is people are getting so parabolically bullish on it that if there's any slight disappointment in earnings or forecasts, or competition gets a little bit more stiff for semiconductor companies, which is what Nvidia does, right? That could very dramatically shave off some of these recent gains very quickly. We could go back and retest like the 95 level very quickly. Again, people will be, people would be shocked by that, but that is how stock mania goes. When you get stocks that just go parabolic, when something comes out of the bullish story and all the hype traders are watching something change for it, very quickly it can dramatically pull back. And again, coming from somebody who I would like to own some Nvidia shares. So I'm not saying this as in like I hate the stock. Am I a little upset that I missed it? Is there FOMO in my speech? Yes, I would love to be a Nvidia shareholder. But I also think that genuinely, you probably wouldn't catch me buying it up in these levels. If it does give us a bigger pullback, it's a different story. And so that kind of carries over to my thought process in the indices as a whole. I don't love this year that there's so much thin leadership in the stock market. If you're watching indices, again, it is a small number of stocks that are performing very, very well. And those very, very well performers are dragging the whole index higher, which is fine. But is it, sustainable? And the question, that answer for me is probably not, right? It's a little bit nerve-wracking when I see, nothing but upside on the indices, whereas when you actually take a look closer at the sectors underneath, you have a broad portion of the market that is not participating. Here's healthcare, for example. Here's energy. These are companies that are in the energy sector, the utility sector, industrial sector, real estate. You can see not very impressive there. Finance, kind of sideways. The consumer staples, those are like your Walmarts and stuff like that. Comm services, this is like Google and stuff. Consumer discretionary, so Nike, Tesla, Amazon. Software is doing really well. XLK is doing incredible. SMH is doing incredible. So you can see these two ones are like doing the work. The tech sector, specifically the semiconductor world, is just ripping higher, and you have a lot of other participants that are just not nearly as hitting it. So that is my concern with the indices. I am still bullish, but I would like to see participation from other areas, and I'd like to see a healthy correction and a healthy pullback. I would, when you're looking at the S&P, a move of 5% lower, or a move of 10% lower seems crazy until it happens, and it can happen very, very aggressively. I mean, here was the market was incredibly bullish in the summer of last year, and then we entered into this phase where we saw a very quick 10%, 11% pullback in about 90 days. That's a pretty good haircut for a 90-day move. So and that helped us reset, and then we proceeded to have this giant rip. So I think we're probably due for some correction on the indices. That would be my thought process. It's not something I'm looking to short. I don't really like to try and time downside on the indices because they typically are moving higher in a bull market. If you get a bear market, that's a different case. If you have a bear market where it's just, persistent, terrified market participants, there's some short side action for short-term traders that can be taken advantage of. But when you're in a bull market, it is very hard to time short side action. So I usually don't do it. Okay, so let's also talk for a moment, come back to currencies for a moment. But before I do so, let me also take a look. I haven't shown this yet. So this is the top status page in the Edge Finder. Let's also take a look at the commitment of traders data for a moment. Here we can see what is up in terms of latest filings from institutional money. What are they buying? What are they selling? We could see that we've got gold still on top, gold, oil, silver. These are, again, I have silver and gold. I'm happy to continue being bullish when I see institutional money is kind of positioned the same way. We take a look at oil. It was actually a big kind of a net buy this week, which is interesting. Just from a ginormous decrease in short positions, which is interesting. You have, sorry, my cat is yelling for some reason. NZD, GBP, gold, these things were bought on the week on an aggregate basis. And then you take a look at the other side. You have US 30, the Nikkei, Euro, Aussie, CAD, NASDAQ, S&P. So you had some selling this week, which is really interesting. These are assets on a week over week basis that symbols that saw selling from institutional money. This report is a very popular one within the Edge Finder. A lot of people love this tool. Remember, you can access this. You can actually, if you are thinking about getting the Edge Finder, you can get it in combination with our VIP sale, get it 50% off. Or if you'd like to try it for 30 days, there is a paid trial that you can do down below in the description. It costs $199 to try it for 30 days. Down below in the description, you can get some information on that. Okay, so let's keep going. Let's also take a look at retail positioning. This is a look at what retail is doing currently in terms of positioning here. And then we have, let's see, like SPX, retail traders, very short on it. Dollar yen, this doesn't surprise me at all because, again, dollar yen breaking out. Sure enough, retail traders are shorting it. Then you have US oil, Russell, silver. These things traders are very heavily long on. Gold, there's a mixed bias there. And then if we take a look at, I'm curious just to see what the investor sentiment survey is showing us in terms of bullishness. Retail traders still very bullish on the stock market. This is kind of a risk on, risk off gauge. I really like to use this tool. Another one is the put call ratio. Shows us where options volume is going. Seems like there's still a bullish lean in this market. A lot of traders still buying calls aggressively relative to buying puts, which are bearish bets. Definitely worth paying attention to. Take a look at the seasonality month of year. Let's take a look at where we're at. So we are going into pretty soon July, which is historically for the S&P actually a very positive month. So I'd be very curious to see if you get that just happens and we continue to push on through the summer, July and August, and then maybe we see the dip or pullback in September and October. Might be worth keeping an eye on. And then we can take a look at some other seasonality here. Let's take a look at seasonality for gold, another one people are really interested in. So we are still expecting positive gains for these 3 months, June, July, and August. And then we're expected to see some negative months if you're looking at the last 10-year historical average for September and October. So worth mentioning there for our gold traders. And we could go through all the economic data, but I've been doing that a lot recently. One thing I will just kind of point at is I'm keeping a close eye on this, the idea of cooling labor data. By the way, Edge Finder users, we just added the ADP NFP numbers, which are very useful for kind of tracking the labor market. Here's the question, we have NFP coming up again pretty soon. Are we going to see labor data continue to cool? Here's unemployment claims. They've been rising recently. Job openings have been deteriorating, and unemployment rates, the percentage, has been going up. So we're seeing labor data start to cool off. And the question is, does that lead to a Fed cutting interest rates sooner, even though inflation has also kind of remained sticky? Also, I'll show you something on the inflation for my Edge Finder friends using the tools that we offer. We did add a new chart. Let's see if it will load today. I've just been doing some work on it. So maybe it loads, maybe it doesn't. But I did, on your own time, if you have the Edge Finder, check out the inflation table. It's been updated and improved a lot. So I think you might enjoy it. We might have to come back to that one because it is currently, like I said, under maintenance. So it sometimes will take a minute to load. Anyways, guys, I did also want to make one last mention. If you are looking to trade directly on tradingview.com, we've got several brokers down below in the description. If you're in the neighborhood, if you're shopping around for a new brokerage to trade directly with on TradingView, or you're just looking for a brokerage that might give you some special sign-up perks, I've got a few listed down below in the description. If you are considering a new brokerage or you'd like to make a switch, consider taking a moment to look at the ones down below in the description. By doing that, by using any of those affiliate links, you'll be supporting my channel. I greatly appreciate it if my video is helpful to you and you're, like I said, looking for a new brokerage. Several of the ones down there, they are regulated brokerages that allow you to trade directly on TradingView. They have a bunch of different sign-up perks. So take a second, if you have not already, do some shopping down there. It is free hustle money for you. Some brokers offer like free shares when you sign up and deposit bonuses and things like that. So again, information can be found down below in the description. Thank you for watching this video. Have a great trading week ahead.